All right. Hello, everyone. Happy Friday. Um, we are already the month of December. The year is going through very fast. It's been an exciting year, I think, in terms of all the activities we've seen within this blockchain gaming industry. And we decided to run and end the year with a new series of panel. Today, we're going to host a panel around VC funding for blockchain game projects. I believe we did one already earlier, but it's been so much change recently in the industry that I think it's definitely a conversation we wanted to revisit. There are indeed a great amount of new projects entering the space. People that are really curious and exploring the different possibilities and might have a question. And we think it's important to share with you some of the insight from the key investors in the space. Before that, I'd like to introduce the Blockchain Game Alliance for those of you who are not yet familiar. We are an organization which is committed to promote the adoption of blockchain technology within the video game industry, and we're doing that by showcasing, educating about the potential and benefits that blockchain enable through decentralization, through NFTs, through DAO, through DeFi, and other things. And how a game developer can benefit from it in the way they create games, they publish games, they play games, they can build communities and engage players around it, and more. The main activities of the Blockchain Game Alliance revolve essentially around networking. We are here to facilitate connecting members, generating new business opportunities among them, educating, research, and reporting, as well as representing all the blockchain game companies, giving them visibility through some of our events, and of course, advocating for blockchain toward the larger games companies. I'd like to give a huge thanks to all our sponsors. This list is growing month by month, and I think it's really representative of how fast the overall industry is growing. So a big thanks to IMD, Antler Interactive, Splinterland, Ubisoft, Zaya, Uvium, Fear Protocol, Gameloft, One Way Block, DNA Cat Kingdom, Metaverse Charmant, Mirror World, Star Atlas, Give Game, Dogami, Decimated, Teva Era, Vulcan Forge, Syndrome, Non-Fungible, Digital Asset Group, GamerHash, Game Exchange, IOI, TriumphX, Drops, Cartesi, Tezos, Algorand, NRKX, Proton Protocol, Polygon, Chromia, Nexttype, Yushi, NFTB, Sushi Swap, Cardia Chain, Contribune, Galaxy Interactive, Animoca Brands, Da Brothers, Simplex, Consensus, Polkadot, G2A, Dacoco, Unix, Akernoon, Bitkraft, who is with us today, and BR Capital. If you don't know all of them yet, follow us and you will learn progressively what each one is doing and how they are really supporting the Blockchain Game Alliance and all its activities. And well, as I was mentioning, the industry is growing. We're proud to count more than 250 members now, coming from games and gaming company, chains and protocol, marketplace, developer solution, esports, media, investors, and many more angles from the industry. We run various activities and events at the Blockchain Game Alliance almost once a week, including interviews, workshops, panels on different topics, new member presentation once a month, and the very popular demo day where you get to see the product, the games, the services as they are right now, and how you can use them and interact with them as a user. And without any further ado, I'd like to introduce our speakers today. So we'll have Paul Su from Decasonic. We'll have Jen Silgers from Bitkraft. We'll have On Yavin from Cointelligence Fund and Emma from ChainGuardians, which is also one of our sponsors. Sorry, I forgot to mention it. All right, and this conversation will be moderated by Luis and Serena.
Thank you very much, Sebastian. So let's start with today's panel. Thank you very much for presenting the BGA. And well, this panel to me, it's kind of very special because I come from a background where I worked for VC and startups acceleration company here in Costa Rica. So it's kind of funny to me that at the end, after a couple of years, come up with the opportunity to moderate this panel, mixing what I did before and what I do today. So it's kind of funny to me being here today and discussing the future and how VC and investment has changed in the past, let's say, months or weeks. As Sebastian is saying, this is moving incredibly fast. So it's very exciting for sure. So let's start with today's panel with the first question. Let's go in alphabetical order today. So, Jens, can you tell us how has been the evolution of investment in blockchain gaming projects in the past couple of months?
In the past couple of months,
Yeah.
I have to agree that so many things are changing in this space every single day that I guess the question of like what's changed in the last couple of months is somehow a legitimate one. I think for us at Bitkraft, like if we look at sort of how is investing in sort of this space different from what we typically have done before our like entrance in blockchain, we're sort of looking at a space where number one, we are not obviously always investing in equity as an asset class, but we're investing in tokens as part of our sort of investment activity, which is fundamentally different in sort of how we have to evaluate tokens, how we have to evaluate like rights and opportunities and utility attached to those tokens. We're investing in a space where governance as part of like some of the token nature of what we're investing in is different from what we have invested in before. We're investing in a space where I think other than in many other spaces, the underlying like infrastructure, the underlying dynamics of how it comes together and plays out are all coming together at the same time and evolving at the same time while products are being built on top of it, which is a super fascinating sort of part of like investing in this space, investing in blockchain and crypto. It also though adds an additional element of unknown that I think you would not find in many other industries. And so I think that's something that poses additional like challenges to like make the right bet if you want to, and like to make sure that you invest in something that you feel like will be the right outcome. I think that for us are sort of the main differences in how we look at investing in this space compared with others. And the last months in particular, I believe the investment activity has been continuing to increase, particularly for games in crypto. I think the number of startups that we're seeing that are coming out and building something in sort of the intersection of games and crypto has been increasing, I don't want to say dramatically, but very visibly and in a good way, right? Like if we compare, I'd say that the quality of founder teams just about 2-3 years ago, prior to our time in investing for Bitkraft in crypto and blockchain with, and let's say we would look at game studios, right? We look at infrastructure and platforms as well, but let's take like games IP and developers. And we would look at like a month of deal flow and teams building new games. And we would compare that with what we see today in a month, just only in crypto. Just comparing the quality of teams that we would see, it is extremely encouraging to see so many high quality games builder teams to build like in crypto, Web3, and blockchain. And I think the quality keeps increasing. And that means that a lot of like development talent, entrepreneurial talent that has been around in gaming and has been building their experience in gaming have really started to understand what blockchain and crypto technology brings to the table and how it will profoundly change the games landscape, as well as to like also understand how to translate it into great functionality and add value and features for users, right? And I think so the quality increase is dramatic and very visible. And secondly, like the investors chasing these opportunities have been like growing in number and in size quite visibly. I think that's probably what I'm seeing the most.
Yeah.
Thank you. And maybe before we jump into the order, like remind us a bit your background, because I don't know if everyone is familiar with Bitkraft. I am, obviously. You've been for a long space in the industry, and you've built a great reputation for yourself. But yeah, in a few words, an introduction about yourself and Bitkraft.
For sure, Sebastian. Like I'm myself an entrepreneur in the game space since the late 90s. I spent most of my career building like companies in esports, electronic sports, the understanding of video games as a sport. I built a company called ESL, Electronic Sports League, which sort of runs probably the most and largest like video games competitions globally, which I sold in 2015. I co-founded an esports team that's called G2 Esports that wins more often than not, like games in League of Legends or Counter-Strike or any other big esports. And then in 2016, I founded Bitkraft Ventures, which started as a venture capital firm in esports and expanded its scope to games and what we would define as interactive media. We manage about $650 million US, invest out of 5 funds right now. I'm a team of about 22 people distributed throughout the Western world and have sort of started our foray in blockchain. Can I say too late? Maybe a bit too late, maybe just at the right time, but about a year ago, I'd say now, and are super excited about what blockchain brings to the space.
Great, thank you very much, Jens. And yeah, I agree. And sorry, I didn't give you time to introduce yourself. I kind of got very excited about the question. So let's start now with when it's your first time answering a question, do an introduction of yourself, please, On and Paul. So now next question would be, let's go with On. So how is it different to invest in the blockchain gaming sector compared to other kind of investments for you? And first, do your introduction and then answer the question, please.
Sure. Thank you. And thank you for the organizers for the panel today and the BGA. So to introduce myself, I'm On Yavin. I'm the founder and CEO of Cointelligence and the managing partner at Cointelligence Fund. We recently, approximately 5 to 6 months ago, decided to completely focus our investments on the play to earn concept and everything around it. About myself personally, I'm considered to be a serial entrepreneur. Started my first business more than 20 years ago. Built and developed different companies in different industries over the years. 15 years ago, started to invest in startups as an angel investor, mentored and advised hundreds of different startups over the years through different hubs, accelerators, and privately also. Lawyer, marketeer, and mostly important, a gamer. I used to be a very, very heavy gamer. I'm talking about a gamer that actually goes to raids in World of Warcraft, competes in arena, and so on and so on. And I actually got back to gaming when coronavirus crisis started about a year and a half ago. I actually got back to playing, and I'm still playing until now, and I'm probably never going to stop being a gamer. And that gets me very, very excited about everything that's happening in our industry. And to answer your question, basically the biggest difference starts with the fact that everything in our industry is based on blockchain and has a cryptocurrency. That makes it completely different if I compare it to any traditional investment. It starts from the fact that usually you invest in tokens instead of investing in equity, even though recently in the last few months we are seeing some kind of a change. Companies are allowing investors to invest in equity and to get tokens as well. And that's something that we didn't see, for example, during the ICO craze usually, and it's a big difference. So the first, that's the first difference that we see. The second difference is that we are talking all day long about DeFi, about decentralized finance, and the fact that many of the projects are based on DeFi. Now, it's very important to note that it is in a very, very initial stage at the moment, and nothing is completely proven yet. But we are seeing the potential of the bright future of DeFi already today. And one more thing that I would say that is very, very different when we are analyzing games, blockchain-based games, is the fact that it's games. So it's not only enough to analyze everything about the blockchain, everything about the token economics, everything about the team, the marketing, and everything that is very well known in usually to analyze when you're looking into projects. Specifically with the gaming industry, we have to remember that it's games. So if we're analyzing the team, for example, we have to make sure that the team is actually capable of managing a gaming company, that the team actually knows how to do it, and they have the proper and the right experience and knowledge. And it's difficult enough to have it with regards to blockchain and cryptocurrencies. Now you need to add the gaming part as well, and it makes things much more complicated. And obviously, I have much more to say, but I think it's time to let the other speakers speak. Thank you for asking.
Thank you very much. Yeah, I agree. Well, actually, a couple of months ago, we hosted a panel on GameFi, and well, it's very interesting to see how everything is coming up together when it comes to gaming and many other sectors coming along in very nicely into this new kind of industry that is evolving. And yeah, and especially for you when you're looking for investment, because there are so many opportunities to fund projects or to add value to users that you have to look up to all these new things that probably weren't in the table a couple of months ago when analyzing startups or projects. So it's definitely changing, and I do agree with you. Thank you very much. And Serena, I think that you were going to say something.
Yeah, I just wanted to follow up from this question and get Paul to introduce himself, but also asking a question around the metaverse. Now, a few weeks ago, everyone, turned the attention on this word because, of course, Facebook decided to rebrand the Facebook platform to Meta. And so how do you see the metaverse evolving and the investments going towards the metaverse developing in that sense? But before we hear from you, if you want to introduce yourself.
Sure, Serena. Thank you for having me today, BGA, Sebastian, Luis, Serena. You guys just do such a great job with these events. I'm Paul Su. I'm CEO and founder of Decasonic. Decasonic is a early stage venture and digital assets fund based here in Chicago. We partner with outlier founders to build billion-dollar businesses at the earliest stages. We believe that the next billion users onto a blockchain represents trillion-dollar opportunities, and we're here to roll up our sleeves, combine our superpowers with your superpowers to build that innovation. By background, I'm an investor and operator of consumer tech businesses, especially gaming. I spent Web 1 as a VC on Sand Hill Road, Web 2 as an early employee at Zynga, building out social gaming, and then on mobile. And then Web 3, we have been investors and believers in blockchain since 2013, closed this recent fund in 2021, and are actively looking to partner with founders to build out this innovation. With regards to your question on the metaverse, Facebook's announcement was transformative. in October. It signals this shift of Web 2 over to Web 3, even what Jack Dorsey did a few days ago, tripling down on Square, now known as Block, signals this paradigm shift over to Web 3. The metaverse is $1 trillion opportunity, and we're just at the earliest stages of this tipping point on this innovation. Specifically, how investors are innovating. The innovations are really how investment firms will add value to founders. I would say many old guard investment firms are very flat-footed when it comes to this. You just heard some innovations about structuring equity plus tokens. The expertise in esports gaming and also gaming native investors provide tremendous experience and expertise to separate out mediocre investors from very good investors. There are a lot of emerging funds like the three you have today that have that experience and expertise to build out this innovation. At Decasonic, we focus tremendously on product market fit. How an early adopter of your game experiences deliver fun and delight to players. That's tremendously important. The experienced entrepreneurs realize that. The experienced investors know how to build that, and together we can build those $1 trillion opportunities.
Absolutely. Thank you so much, Paul, for that. I think it's very interesting what has happened and the shift, from Web 2 to Web 3, as you described it. It's interesting to see that before the internet allowed so many people to be, to have the freedom to express themselves. And now we're seeing that the internet stands in the background, and also you have the freedom from companies. And so you can build your Web3 platform and application as you want. So there are different degrees and levels of freedoms that I think we are allowing users to experiment with. So in that sense, there's a great question that came from Fat0, one of our follower that joins the BGA every week. So thank you so much for being here with us today as well, which is around DAO. And I want to extend this question to everyone, Sebastian included, because I think another challenging point in the future of investments would be, how would you look at investing in projects that include a DAO structure in their ecosystem? Do you see that as a challenge or as an opportunity? And that's an open question to everyone.
I'll jump in. We just made 2 investments in a DAO structure. We believe it's a massive accelerant to the ecosystem when you can co-build with your early adopters. Having player ownership in game in your project is a differentiator today in how these innovations scale up to $1 billion opportunities.
So I think I'm a bit. First off, investments in DAOs, I think, are probably on the most speculative is the wrong word, but least predictable in outcome probably, because so many things around how DAOs are organized and come together is really experimental stage today, right? Like conceptually, what DAOs do and bring to the table is exciting for the reasons that also Paul mentioned, which is participation, give power over decisions and future developments in the hands of communities. But at the same time, I'm not entirely sure if that desire of handing the power over at all times is what brings the best product to the table. Like in gaming historically, it's not like users never had a say. There's Reddit, there's forums, like users make themselves heard, and gamers are some of the loudest people that you can find. And if you played World of Warcraft, you've well seen how gamers change decisions of how World of Warcraft balance was working and what's the next kind of feature that's changed. So users were heard before, they had a voice. And now, of course, here and with DAOs, that's getting more powerful and more structured in how it influences game development. But then sometimes decisions that were unpopular with players turned out to be the best decisions, because decisions on like what to change in a game that has quite a bit of depth, you know, and like the greatest games and those who are probably the closest to like really define what we kind of call the metaverse now are games with real depth, right? The games that we still have to see in blockchain gaming, and balancing and designing games with real depth. That's like running a country. For me, great games are digital societies, and running a country, running and operating a digital society requires decisions that are based on so many different factors and such a complexity that educating people to make an educated decision is a whole process in itself. And we can see in many democracies on our planet how that goes. Like they slow down, right? Like you're probably have like fatigue of watching what's happening in the US and in Germany or France or other like democracies on our planet, which is not only because politicians might not be what we want them to be, it's also because the complex decisions in complex systems like these require a lot of education and context. And if you're about to kind of give power in the hands of a lot of users to make decisions that ultimately require a lot of time to spend with, then I'm not sure if that's always the best idea, right? So I'm just putting that out there. And if you pair that with how decision-making is going on in DAOs, right? And like how participation is working out, which again, not only the tools, but the processes still have to be figured out really to make that efficient. And we'll see a lot of further like failures around that in the blockchain space for sure. But I do think as romantic as it all is and as excited I am about like some of the ways that it can actually work out well, I'm also concerned on could you really run any game just better as a DAO? And I think my answer would be absolutely no.
So I'll jump in, and I have to say that I definitely agree with most of what has been said. And I'll just emphasize and add to it. So first of all, yes, I think that as Jen mentioned, it's probably the most risky type of investment at the moment because nobody knows what will happen. If somebody is saying that they actually know what's going to happen with DAOs, they are absolutely lying. Everything is in experiments at the moment, everything. And on top of it, I'd like to remind everyone that even DeFi, decentralized finance in general, didn't prove itself. Now, I'm a huge believer of DeFi. I actually wrote a book about DeFi, but it's still not proven yet. And there is so much to be done and to progress with to make it actually happen and to become a reality. And let's remember, most of the crypto users on Earth are tech-savvy people. It's even crypto in general is too difficult for most of the population on Earth. Let's remember that. So if we talk about DAOs, that's like add like 5 times more complexity. And that's why it's so risky and not proven yet. And on top of everything, let's remember one extremely important thing: regulation. Nobody knows what's going to happen regulation-wise in most of the Western countries, especially. Okay, fine. We have the new laws in Wyoming that already established a great progress for DAOs, and other jurisdictions that are addressing it and working on it, but it's nothing yet. There is a very, very high probability that there will be a lot against DAOs in the process, and we still don't know what kind of laws and regulations we will see about that. And we already seen the huge problem and the crypto community screaming about the US infrastructure bill as an example. So I don't even want to think what will happen when they start actually going deep into the DAOs topic. But having said all of that, I am optimistic, and we also invested in a DAO-based project already, and we will probably invest in a few others. But with a high risk comes a high return as well, as everybody knows.
Thank you so much, everyone, for sharing your views. I think it's such an interesting debate, and every one of you had great points towards, one side or the other, but I think they're all contributing to the development of how investment in this field will go. Sebastian, if you want to add anything to this.
I think maybe I would make a little bit more difference and granularity, like between investing into projects which are equity or token based, and we'll have a DAO that will enable like the token holders and the user of the product, platform, or service to participate into some portion of the governance of that world, and like DAOs established strictly for a certain purpose, such as collecting art or acquiring NFTs and generating a certain yield for them, like, I don't know, Blackpool or the Lao, etc., which are, and I think like the audience, the member of the DAO, if we really focus on the one typically focus on acquiring NFTs for art collection or NFTs of high value for yield farming into play to earn games, we need to review, and as you enter, like who are all the existing members of that DAO, and do they share a certain common interest? And typically, the interest of certain investor is not the same as the interest of certain players. The time frame they are looking at for the return of the investment as well is different. Traditional investors or crypto investors will have more of a mid to long-term time frame for their return on investment, whereas the regular user will be much less impatient around like they would want. And hence, there is a balance as well. And that balance could be inflated by like the distribution of investment. Investor will come with a certain check size, which will be in the higher range, giving them more voting power than the small retail investor or individuals, which will have much more small portion. And that's, I think, usually the best DAO have done a great job at selecting people, forcing them to put a certain minimum ticket, forcing them to have like a good distribution of voting power around the members, and making sure that everyone who is in the DAO understands from the beginning the rules of the DAO, the purpose of the DAO, and what they are all in for, versus like the most diverse one.
Definitely, yes. Thank you. I think that's a very interesting point raised by Robert, audience member watching this live talk. So thank you so much, Robert, for this question, which is about considerations when you'll place an investment and consider equities versus tokens. So I don't know if you've been in that position and which one you have preferred, or whether you go for both. Again, open question to all of you.
So just we are answering the question on the screen, yes? Just to make sure. Okay.
Yes.
So to answer that question, I don't think that the comparison should be equity versus a token. If I may suggest, I think that the main difference between projects should be if anything is developed already or not. That would be our first question. Because most, or I don't know if most, but many of the projects that we are seeing right now are raising based on presentations. When we are asking GitHubs to actually analyze them, most of them are actually surprised that we're asking for GitHubs, but that's beside the point. So that's the first question. The second question is going back to what I was mentioning before, when I mentioned that we are looking at everything around what they are basing the project on, what blockchain, what cryptocurrency, if they're creating their own currency, who is the team, and so on, the experience, the abilities, and that will influence the evaluation for us. But having said all of that, from our experience, most of the evaluations are actually a copy-paste from other projects. We are actually trying to help projects when we are analyzing them and give them some pointers to make changes, and not just to follow the herd and do like what everybody else is doing, but actually think what is the best for that specific project. So that might influence the evaluation. And of course, the most basic question is at what stage are we, not just with regards to if something is developed or not. We have the different rounds and so on that are influencing the evaluation, but that's the most basic thing, obviously.
You know, for us at Decasonic, equity is for proprietary and defensible analytics and code. tokens are generally optimized for open source and ecosystems. The best operating companies going forward can delineate those two lines of business, lines of their project and innovation. When we look at blockchain gaming projects, we consider how big their category, their genre might be. What a founder can expect from our due diligence is a process that's accretive to their strategic insights and also deeply focused on how players might enjoy their game. So that there are parts of a gaming project that should be proprietary. There are parts that probably should be open sourced.
Yeah, let me add from my viewpoint about the differences that we're seeing as sort of folks that come from the traditional investment side before and did a lot of equity investment for the 7 years before. I think number one, like any investor would lie if he sort of would not point out that tokens for this equity have the beauty of providing liquidity to investors earlier. Tokens have that nature that more likely than not, you will have sufficient liquidity in like public, semi-public markets to sort of liquidate your positions. And for investors, that's a great thing to have. You can get out of your position earlier than you would typically be able to do in an equity position. You have more flexibility on how to like deal with your position. And I think that's very appealing for investors at large, right? So and I think that's something that many investors are recognizing. I think on the more challenging sides, and what's countering some of that is just like your governance rights that you have as part of like your token investments are typically weaker. You have less influence and impact over company and project than what you would typically have in an equity financing if you lead around. And for an investor working with his companies and like fulfilling his fiduciary duties towards his LPs, like governance rights can sometimes be fairly important at critical junctures for companies. I think the third point is probably how we look at the regulatory framework around tokens, which is, as said before, evolving. And that's obviously entirely different from investing in equity. It's something to monitor every single day. It's interesting to see how all these different blockchain startups and their blockchain legal teams, which are like have partly wildly differing views on like how regulation probably works out and how they have to structure their investment agreements to kind of give you what you ultimately want. That's very different from the equity side. And lastly, obviously, when you start to invest in tokens, you look at like ownership or like distribution of the token supply for others like an equity cap table, like you look at the different structure, because as also mentioned before, we have these large positions for treasury and community, and it's not like you're comparing like equity and token cap tables, like you should compare like apples to apples. It's a different setup where in the fully diluted cap table, you basically find sort of an implied marketing budget, right? You basically find like an implied authorized capital in there already. So when you look at that and when you like find your position, your ownership position, then you sort of want to reflect that differently than you would do in an equity position. And it also brings forward certain challenges on how like future follow-ups are going to happen. That is much more clearly defined in your equity positions. It is certainly looking much different on the token side. So that's, I think, the sort of top things that come to mind, abstractly speaking, like how we look differently at both of these sides.
Awesome. Thank you very much, Jens, and everyone for answering. There are actually a lot of questions coming from the audience, and thank you very much for your participation in this. So we would like to address most of these questions. Maybe we can try to separate or divide among you guys who will answer each. So there's a question coming from Sammy, and it's kind of a follow-up question to both of the past questions, the DAOs and the tokens. So it says, are these then 100% token-based deals? If so, presumably you have a lot of governance power. Do you already or plan to delegate that power? Maybe Jens, what do you think about this? Oh, you're in mute.
I'm sorry. One one thing that confused me in particular, and again, I'm probably like the most immature of all like crypto investors here on the panel, was that like you get into these crypto deals and you have like tens or hundreds, or like what was the latest record I saw on Twitter? I don't know, a company that had like, I don't know, a gazillion like investors in their round, right? Like, and so like, yeah, I mean, the nature of what you're investing here is like these rounds are so crowded, and it seems like entrepreneurs are thinking like the more names I get on my GIF on Twitter, like the better it is for my next NFT sale. I don't know. Like, so like when you talk about governance, I mean, the one problem to begin with is if you buy like a $200,000 token position in the seed round in the next game startup, like, yeah, there's not much governance to begin with, right? That's very different from you're leading around with like 50, 60% of an equity allocation. So like, I think that's one like inherent challenge right now that I think many founders are optimizing for, like, whoa, there's all these names, like, and it seems like more names are better kind of thing. Yeah. Which I don't know, maybe I'm too old or too, I don't know, whatever. Like, I just don't think that that's necessarily true, right? Like if you think from an investor perspective, like how can somebody reasonably support a company where he does like $100,000 checks the same way than if we would do like, I don't know, $10 million checks, right? Like that's just like, I just don't see that like as very healthy, but it implies that there's not a lot of governance. If you have a larger position, yeah, then certainly these considerations come up. We have been fairly early. Like I'm personally now investing in this space, I mentioned before, 12 months. Have we been in a position where the consideration came up that we would delegate our power to somebody else? I got to be honest, no. It is a question that will certainly be an interesting question for us to ask. I think strategically, as I believe tokens will play a growing role and relevance in financing of startups, in particular in gaming in the future, we want to develop skills as an investors to be great partners for governance in companies, which is a skill that, differently from equity investment, where you sit on a board and you're a director, you're now part of a DAO in a community, and contribution to good decisions is community work. Your community as an equity investor is your board. That's a very small community, right? Like, so like how you engage in a DAO is different. We aim to become good at that and like be good at this new framework. And the best practices on how we get that done, I will probably be able to tell you in the next BGA panel in a year from now.
Okay, well, thank you.
At Decasonic, our customers are our founders, and we strive to deliver massive value to founders. You know, we also delineate a big difference between legal governance power and very good strategic influence with project leaders or CEOs, and where they both align, that's optimal. We aim to provide tremendous strategic support to our founders, and so influence is what we aim for, and however we get there, we will deliver that to our customers, our founders.
Awesome, thank you very much. Well, you're already invited to the next panel on investing in DAO projects. So absolutely, it's a very interesting topic for our next panel the next year. Paul, we have a question. Oh, sorry, Sebastian.
No, I think definitely it's raising so many questions on 2 days that I think will bring on all sides of around the question, like not only investors, but people who are running DAO and members who've invested into DAO, to get a good perspective on the matter.
Yeah, 2022 we'll host a special panel as a follow-up of this panel. So thank you very much for the idea. Kodiak is asking Paul, how does product market fit differ in a play-to-earn game versus non-play-to-earn game, if at all?
Yeah, product market fit in a P2E game probably looks a lot more like product market fit in a gig economy company, the Ubers and Lyfts of the world. A lot of non-P2E games, that product market fit is surprise and delight, a player genre fit, so to say. There are other intangibles in that casual game sector, and so the nuances of those two product market fits is strategically important for how an entrepreneur scales that. Having said that, they're all starting to blend together, especially as you're seeing the onset of GameFi intersect the whole blockchain gaming sector.
Awesome. And well, there's another question from Zach Cohen. Maybe this one can you answer this? How do you underwrite project out revenue in P2E games, since the revenue is lumpy and could be driven mainly from primary sales? What do you think about this?
So I think the most important part is to remember that P2E is based on some kind of a token. And the most important part, and of course, we need to remember that in different projects, you have more than one type of token. So it can be one token, two tokens, even three tokens, different types. And the most important part is, and of course, anything I'm saying right now is not financial advice or anything like that, but it's the token price. Let's remember that. And revenues, many times for P2E projects, are based on the token price, because when you're playing the game, you're supposed to get tokens, or you're supposed to get in-game items, and then sell them for the project token, and then the revenues are there. And obviously, it's not just for the players. It's for the players, it's for the team, it's for the investors, and so on, because everybody is are interested in the token. The second part of my answer would be that the future revenues, if we compare that, if we look at the different projects, at the different companies, and we compare it to the traditional gaming space, when companies used to sell games to the players before they started playing the games, or when we changed, when we saw a huge change in the models from pay to play to free play, and then you're buying different things in game and so on, and it worked very well for some of the biggest companies out there. I think that with regards to P2E, it's definitely going to be the items themselves in game that will produce a lot of the revenues. But having said everything just said, we have to remember that it's way too early. We do not have enough examples of play-to-earn games that actually prove themselves market-wise. Everything is potentially right now. You have maybe a few of these real examples out there that you can rely on, and we have to see what's happening in the next few years.
I just add like 2 or 3 comments expanding on what On said here. I really dislike the term play to earn games. I like when you have something like play to earn or free to play, like it sort of, it describes a primary characteristic of the game, right? Like when you think about like P2E game, then it tells you like, well, the primary characteristic of the game and what it's designed for is that people can earn. I just think the primary characteristic of a game that allows people to potentially also earn as part of the game experience is that it's of great depth and has a sophisticated economy that's modeled out in the game, which many games in the past, even prior to the blockchain, had, such as World of Warcraft, such as EVE Online, such as RuneScape, where people were earning as part of their gameplay in a less structured and maybe more like gray market-esque kind of way. But I just feel you should not design a game with a primary purpose of like, the people playing this should mostly or all earn. That is conceptually not even possible, right? Like you should design a game that fundamentally has great game design, great depth, like a great economy to it, and then that some of the audience will be able to earn as part of the entire community will be a possibility and something beautiful. But I really dislike that we're like making so much of what blockchain gaming is about is like play to earn. Like it won't work that way. It's just misleading, and I don't think it's bearing anything good for this industry.
Yeah, that's an interesting point.
If I may respond to that, so I'll say the following. First of all, I think that there is a lot of room for both. I think that we will see many projects that are focused on the play to earn part, and there will be many projects that are focused on the gameplay, and the play to earn will be a byproduct in the game and just an added bonus. But in my opinion, and I'm saying that as a gamer, I think that first of all, most of the investors that are saying that they are doing this to support the progress, to support the ecosystem, bottom line, they are doing it for profits. Most of people, most of companies are doing things for profits. They're not doing things for having fun. Having fun comes when you have money to pay for things to have fun. And I'm not saying that as something that I look at. That's not my agenda. I'm just saying that that's the general agenda, and we should be aware that's how the world works, because money talks, as they say. And I would say the second part of my answer is that we are seeing that the play to earn concept is the strongest keyword right now. But we are going to see so many other concepts like build to earn and other types of to earn. And to be honest, I don't see anything wrong with that, because again, going back to what I was saying before, anyone can decide if they want to make a living from playing games, then that's a great way to make a living compared to other types of jobs. If other people would like to enjoy the games and play them for fun, that's great as well.
Yeah, I think the earn part that just implies that this is some sort of like money printing thing, this game, right? It's just like, okay, you play and there's always money coming out of it. The reality is you got to fuel the economy that provides people with the ability to earn with like cash that goes in on the other side, right? And like that can only come from people who have a true interest to ultimately like pay for having an enjoyable experience. And whenever there's more money going out of it for people that are all earners, then there goes in from people that are actually willing to kind of fuel the economy for the value they're getting out of it. It unfortunately doesn't work unless you're doing what the crypto community hates more than anything else, which is like printing digital currency. So like it's like, I think that's like a bit of what we're like should be careful about. A lot of what we're seeing right now is fueled by investment and investment funds, which we're part of this. I got to be honest, right? Like to some extent, we're fueling game economies right now, and a lot of what we see in liquidity that goes to play to earn players is fueled by investors buying tokens, by institutionalized like NFT purchasing operations that are like fueling a lot of these economies. But that is not players. That doesn't mean you have a good game going to begin with.
Absolutely, Jens. There's no, just to make things clear, we do agree on that. And to just add to that, I think that we are in a bubble right now. This bubble is going to explode exactly like when we saw the ICO craze being exploded. And many people are going to lose money because of that fueling that you are mentioning. And what you mentioned before, I saw that example as well of the project that had more than 70 different investors, and somebody was commenting about what exactly are you building, a colony on Mars with that funds being raised. So don't get me wrong, I do think that we are seeing another craze right now, but I think that out of this craze we will see the new gaming industry being built.
I agree with you there. I want to cut this short. I'm looking at the time, but like I have seen those dramatic, obviously, bear markets in crypto. I hope we will not see them again that way. I have a feeling that they're not going to be as dramatic again. I do think sort of that we're not necessarily in the most dramatic bubble of all. I am super hopeful and excited because what I'm seeing right now and what we're able to finance is exactly those quality game developers that provide real depth of economy, like real great gameplay built natively on blockchain, right? And I think that's that sort of second or third wave of game builders that truly play to Web3 and crypto that will sort of fix that. And I think you were alluding to that as well. And I think we're seeing the first of these great products like coming to daylight, like starting right now. And that gives me a lot of confidence, right? And so I think there's a fascinating discussion. I think we should all take a sober view and not drink too much of our own Kool-Aid here in this space. But like what's coming next year is going to be mind-blowing, that's for sure.
Absolutely
Yeah.
agree.
Thank you very much, Jensen and Paul, for your discussion on this. As a wrap-up, because we're running out of time, we would like to ask you a couple more questions, and let's try to keep them short to be on the time frame. So any advice, one advice per person for founders of blockchain game projects seeking investment?
Build the fun and meaningful player experiences and find an investment partner that's going to help you build that.
Jens?
I'd say if you are building a crypto project, a blockchain-based game, make sure that you have the right capabilities, the right team members. If it's a CTO that can actually handle managing the project, everything around blockchain development. If it's the token economics, then make sure that you do not copy-paste token economics from others, but create your own token economics that makes sense and is really relevant for the project that you're building. And make sure that you have someone that can actually handle the marketing for the project, because crypto marketing is completely different than traditional marketing.
This was all great points. Let me maybe try to add two to those. Number one, I think for founders raising capital right now, maybe new founders, I think the ease of how to raise capital right now can be very misleading. I think founders should try to sort of think that in 12 months, the funding landscape can look very, very different from what it looks right now. And make sure that they don't think like raising capital in the future might be as easy as it is right now. I think that's probably one piece of advice. Like build something where you raise enough capital to survive and to build without distraction for like 24 months probably. And make sure you're set up in a way where you're staying lean and agile, because this space is changing so quickly. Like the ground under you is still shaking. Like it's like the earth is coming together, right? Like you're on shaky ground, and like you got to be staying agile to like continuously like adapt to those changes while like this space comes together, and be able to like raise follow-on rounds in like good and meaningful structures. So I think that's probably the two pieces of advice on top of what On and Paul already said.
Thank you everyone for sharing. And Sebastian, any points to share?
Sure, of course. Well, the conversation was so lively and we're running a bit short of time. So what I was referring to, what I think is like when play to earn will become the norm, like it will not be like the differentiator. Like what's left is like the quality of the game, the fun, and in a market where there's more entrants, more competition, you'll have to differentiate. You'll have to keep refining the mechanics, go more in depth into how those economies are designed and benefiting players, since most of game will be competing for player attention, and only the best then will survive. And I think, like Jen said, we're just at the beginning, and we've seen that before in any maturing industry. I think like blockchain-based gaming will be no different in that sense.
Thank you. Thank you, everyone. So very important before we all go. Somebody was asking, and I was curious as well, if anybody wanted to reach out to you and has interest in connecting, can you let us know what's the best way to get in touch with you? Maybe we can quickly go around. Paul.
DMs are open on Twitter at Paul Su at Decasonic.
So it's very easy to find me. You just search my full name on LinkedIn or Twitter. And you can ping me there. And of course, you can always send me an email to on@cointelligence.com.
Thank you. Jen.
Yeah, well, I think same here. Our website, www.bitkraft.vc, gives you quite a good view of who we are, what we do, and how to get in touch. My Twitter is @JensHilgers.
Thank you very much, everybody. All the questions will stay on YouTube and social media. So I'll invite everyone to continue the conversation since it's been such a lively talk today. You can continue retweeting this live conversation and keep commenting. Same on Twitch and YouTube. But once again, thank you so much for joining us at the BGA today. Thank you all.
Thank you, everyone.
Thank you.
Thank you,
See you
everyone.
next week.
Bye all.